Welcome to my channel. Today we are going to talk about bookkeeping, tips on bookkeeping. And this one is a very crucial topic for me because this one will define for you whether you run out of funding or not. And if you do this very well, because this one we are never told, and this one for me I learned the hard way. I was I was getting advice from people who are not telling me the right things, and I'll let you know as I'm taking you through the 7 tips of bookkeeping. So, if you are starting a business, this is very crucial for you when it comes to managing your cash flow. Here are 7 tips on bookkeeping. Number one, budget, budget, budget. This one is very crucial. Let's say you have funding, maybe it's your saving, or maybe you got some friends who funded you. They usually call it friends, fools, and family, FFF, where people come in, they believe in you, but they really don't know whether you'll succeed. So you really want to take care of your budget to ensure that it takes you far. When you're starting a business, you're usually so optimistic. We are thinking big, not knowing that we have to take things slowly. You find somebody getting a big office, getting good new furniture, furnishing the office to completion, putting in employees in place, and by then you don't even know whether the business will go through. And I did exactly that too. I did that. It's only that the funding I had was minimal. I got money from I used to save with a circle, so I got my money from there, and I started the business slowly. So, and I remember I started the first office I got was a store that I had to renovate to start my business there, and that is how I started. But I didn't budget. But now, from my experience, I can advise you to budget. The moment you budget where you are going to put your money, where you are going to, where with the money that you have to budget on where you are going to put in your money. Do a focus on what you're expecting to earn. This one will also help you to ensure you put in more effort. It's like it gives you direction on how much money you want to earn so that you can be able to manage the business. And also, this one will help you in pushing yourself to ensure that you're able to meet that target that you set for yourself in the budget forecast. So when you're doing this business, always budget. Some do it annually, some do it biannually, some do it quarterly. I prefer to do my budget quarterly because when I do it quarterly, I'm able to make changes within that period. I'm able to make changes within the quarter. I take the quarter as my year. So the weeks, which are 12 weeks, I count them as my months. So it's easy for me to look through my budget for the quarter and be able to adjust as the time is moving on. It makes it easier for me and it keeps me on toes rather than for budgeting for the whole year. And then number two, record all your expenses. All your expenses have to be in record, even to the smallest bit. When you are buying a pen for the office, record. When you are buying papers for the office, record. When you are using bus fare, record. If you are fueling, record. If you're using a motorbike, if you're paying a motorbike rider, record. Everything is crucial because money is lost in those tiny things that you don't expect. The moment you record your expenses, you'll be able to know where you're spending money more, whether it has additional value to the company. If it is not having any additional value, you can try to streamline to ensure that your expenses you don't exceed your budget. And then number three, record all your income. Record all the income that is coming in. Let it be in. You can use an Excel sheet. If you're not good with Excel, you can use a notebook. But at the end of the day, if you have to bring in an accountant, it will make it very easy for him to to do the accounts and be able to give you feedback on how the company is going financially. So ensure you keep all your records. If you take any money, you record it as an income to you. Yeah, because maybe initially you might not be able to pay yourself the right salary, but it should be in your plan in such a way that in the long run you are able to pay yourself sufficient salary so that you do not get to go back to the company to get some money for your own purposes, but record all the company's income. This will help you later. Even when it comes to the bank financing you, these are the very crucial things they look at. How you are spending, how the money is coming in. They look at that is called cash flow. They look at your cash flow. And this will determine whether you are able to get that loan later on. And this is where also you'll be able to see the loopholes, whether whatever you are earning, if it is just one service or product, you'll be able to know whether this product is really viable. If you have many products, you'll be able to gauge which product is bringing you the most income, and you'll be able to focus on that product in terms of marketing. And then number 4, and this is very important, taxes. This one you cannot avoid. In Kenya you start paying taxes from day one. They don't have that gap. I'm trying to remember that name, but they don't have that season or session where for startups, that gap for not paying tax. So from day one, you have to ensure you put aside money for taxes. If you can open an account uh, for taxes, it will help you in the long run. And this one, I am telling you from my bad experience of how I handled taxes. And I got very bad advisors who used to tell me, just file nil returns. And by then, there was no e-teams, there was no iTax, everything was manual. You, you write in a book. We used to do our returns using booklets. We used to get booklets from KRA, and then we do the calculations and do our returns with those booklets. But now things are much easier. So what you ensure, if you are paying VAT, if you're paying VAT, because for me, I started paying VAT from day one. I was dealing with businesses, and with B2B, the VAT factor is very crucial. It was very crucial for my clients. So I started paying 16% VAT, and I started paying 30% corporate tax. So that is 46% of your income goes to tax. So that one you should know from day one. You work 100%, 46% is a sure bet that it's going to taxes. So if you can put 46% of every income that comes in, if it's 1,000, you put 46% of the 1,000 in a different account. In the long run, when you are doing the tax math, when you're doing your return and you have to make payment, you will dip into that tax account to pay your taxes. But this will save you later. As you go on with your business, it will save you in terms of penalty, in terms of fines, which I was never told. And paid, I paid it the hard way, because when they come to audit they come to audit your account and they discover you've not been paying taxes, you are in for it. But if you have records of everything that you do, if you have records of income, records of expenses, and record of loans and the taxes that you are paying, it makes it even easier for you to explain to them that this is the money that I owe you. But without all these records, it will be trouble for you. You know what they do? They come into they ask for your statements, your bank statements. They do 46%. They don't care whether it was a loan. They don't care whether somebody gave you the money. They do 46 of the amount in your account, and you pay that amount to them, and that is very expensive. So from day one, taxes should be key. Taxes should be key. And then number 5, always put aside an emergency fund. This one, nobody advised me. Nobody advised me about emergency fund. I never had an emergency fund. So when COVID hit, things got bad, really bad for me. So if you can put aside 3 to 6 months of emergency fund, it will be handy because there's some things that happen. Life happens. So if you have an emergency fund, if you have employees in place, you'll be able to pay them on time. If you have other things that you have to do, maybe you have machine maintenance, if you have equipment, you'll be able to dip in to the emergency fund if the money that you are using, which is in a different account to run the company, has gotten below the is below the has like you run out of your money for running the company. You can always dip into the emergency fund, but always ensure that there is a 3 to 6 month emergency fund for in case of anything. And then number 6, you put aside retained income. In accounts, they call it retained income. This is money that you put. It's different from the emergency fund. It's different from the tax. It is money that has remained after you've left money for everyday running. You put aside money for emergency. You put aside money for tax. You put it aside as retained income. And this one will help you in terms of planning for capital expenses. Maybe you want to buy an equipment. Maybe you planned to buy a building for your office later on. That money will become handy. Or you've decided that you are going for holidays after working hard, or you've decided you are giving your team a bonus. This money becomes handy. And then tip number 7, pay yourself a salary. Separate your personal income from your business income, because obviously you have your expenses. You have food to buy, you have maybe rent to pay, you have your children in school if you have children, or you have to go to school yourself. When you use your personal income, you'll be able to plan for your personal income separate from your business income. And with these 7 tips, your bookkeeping will be aligned and you'll be able to run your company with a peace of mind. Hurdles will be there, but they'll be less stressful than if you didn't have these tips in place. So ensure your bookkeeping is tip